Okay, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is 5:20 in the a.m. Eastern Standard Time, the 12th of January. Okay, what we're going to talk about today, obviously the pre-market activity. We'll take a look at the futures, bond market, stock market, and some commodities, as well as currencies. Then we're going to talk about Twitter. I want to do a follow-up to Twitter. For those folks who did not watch my video from over the weekend, I can't link to it in a live stream, but it is posted in the... I'll add it to the video description area if you want to check that out once I publish this, or you can just search for it on my video library over the weekend. I posted it on Saturday. Then we're going to talk about what you want to talk about. We're going to talk about stock chart requests. We're going to go for about a half hour today. I go to members first. If you're not a member, consider signing up. And I also want to talk about our sponsor, which is TrendSpider. Folks, we're going to be using TrendSpider today. I swear by it. You need to, in this day and age where time is so valuable, you need to automate your grunt work. You are able to customize and automate the manual technical analysis you would otherwise do by hand, but with your own rules. If you're able to speed up your analysis and improve your accuracy and reduce costly and analytical mistakes, well then you're hitting home runs on a daily basis. And the best part, and this is where they've really caught up to their competition, is with their scanning, functionality. You're able to find winning trade setups, and with the alerts, which is what I use constantly, are the trade alerts where you're able to time your trades with precision. They have a 7-day free trial offer. I offer it free to gold level members. And we get a 14-day free trial offer over at thecontrariantrader.com. So please sign up and get TrendSpider. Okay. Yesterday, we had news come out that I initially reported, because this is what I was told, that there were 60,000 accounts purged on Twitter. It was actually 70,000 accounts. I lost 15%, maybe a little bit more now, because I keep drifting off. I didn't check today. 15% of my sub count. And I don't have a huge Twitter following. I'm not a big believer in it. But, you lose 15% of a small number. That's a big number. And as I mentioned over the weekend, I predicted that Twitter would fall. Here's a chart, daily chart. We closed down the day down 6.41%. We were down as low as 11% on the day. The only reason why we rallied here was a counter-trend move higher off of the third standard deviation Bollinger Band. What I think is possible is that they may rally it yet again further to fill the gap at around $50 per share. Maybe even overshoot to the upside. Maybe get a little bit of short covering rally. Perhaps even move up to $53 per share. Right here, we had some resistance on the 7th where it broke support. Entirely possible. Look at the volume yesterday, massive volume. And when you take a look about at the other news that came out, I can't think that they thought this through. It's obvious that all of these companies, I want to say FANG, but they're not all FANG names. Netflix is not involved, as far as I know. They have their own troubles with that stupid little girl movie they put out. Anyway, Germany and France shocked over Twitter decision to ban Trump. You know, they don't like Trump, by and large, the Europeans. But one thing they really, really don't like is a threat to their authority. And Twitter is that threat. Amazon is that threat. So, and I'm going to be doing a video on Amazon with regard to their shenanigans as well. So this is going to have ripple effects for a long, long time, and not just solely focused on Twitter. Get ready. Get ready. I think these valuations are going to come under pressure. They had it too good for too long. Their hubris grew, and here, take a look at this. Glenn Greenwald. For years, I heard it's invalid to object to political censorship by Facebook and Twitter, because if you don't like it, you could just create a competing social media platform. And that's what they've said. Parler tried, and in 24 hours, Google, Apple, and Amazon united to destroy it. That's what monopoly power looks like. Huge. This is the attitude that is growing. And my video, which again I posted on Saturday, has roughly coming up on 2,000 viewers, and by far, it's the most commented on video I've ever produced. So, and I've had videos with over 5,000 views. This one is way heads and shoulders beyond what any other video has commanded in terms of passion by viewers, and mostly very, very ticked off people. Let's get to the pre-market futures action. Since we're focusing in on, hey Sam, good morning. J.A., good morning. I'm doing okay, Sam. Hope you're doing well as well. Let's take a look at Twitter in the pre-market. Yeah, so they're going to goose this up a bit. They're going to take off that oversold condition. You already have it. All right, so this is what I'm going to be looking for. Take our crayon out. Let's make the assumption that this is our lower band of support. And by the way, I don't know if I mentioned this. It's still early, and I'm only on my first cup of coffee. We went short of Twitter yesterday. So we opened up a short position. We will be looking to add to that short position fairly aggressively, but only when the time is right. I wanted to scratch the itch. We scratched that itch. We're a part of it. We are, as they say, committed to it. And absent a buyout of some sort, I don't think they're going to do it at this valuation. Twitter, stick a fork in it. Let's go to the... before we leave here, I'm looking for a break of the support level, possibly a double top, trying to recapture support. But what if we recapture? Where do we go to from here? We can rally, as I mentioned earlier, all the way up. That's sloppy. All the way up to here at around sorry folks, all the way at around $53 per share. And if we get up there, and I kind of hope we do, I'm going to become very, very emboldened to lean into the short side. In fact, I'm going to set up an alert here. Slow it down. Slow it down. There we go. Alert set. Good to go. All right. So we're good to go with Twitter. Let's add one more here. I want to know if we begin to break down. And we're good to go. That's it. When I go to TrendSpider, I'll set up my end of day alerts. My pre-market alerts are set. And we're good to go. It's Bob. Everything's good here. Brexit's still causing problems for you, huh? How so? Is there talk of concern of a breakdown of the EU? Or no? I have to tell you, Sam, our news media here, we don't get the news anymore unless you look at Newsmax or... All right, let's go to the dollar. The dollar had a very strong day yesterday. Net, it faded on the day, but it closed up. We are down this morning. We are opening up the day above 90, a very critical psychological support level for the U.S. dollar. What was resistance in red, we now have to treat as support. The question now is, do we break out Thinkorswim is all sorts of wonky today. There we go. Do we break out above this resistance level, setting the stage for a big bull run higher, or do we fail? It looks as though it's setting up for a higher high here. Taking a look at a weekly chart to get a feel for where we are on a weekly time frame. At current, I know this is a little bit noisy here, but I want to keep these lines up. For now, anyway. Weekly chart, note how at current, that 90 mark is critical resistance. The week is not over. We may fade. The however is, we're above that resistance mark. I would not be surprised to see a fade by the end of the week. But that's one of the main reasons why I asked Sam in the chat box about the EU. Okay, so no worries about the EU. It's solid, in your opinion. Okay, good. It's because of the small business. I see. All right, so small business is in disarray due to Brexit. Gotcha. Let's take a look at gold. Gold is up this morning. It did manage to break out overnight on this 4-hour bar right here. Successful breakout. This new bar, which opened up at 5 a.m., it is retesting support. Ideally, we get a move higher. Let's go to silver. Silver, same deal here. It broke out. Now it's pulling back. Doing a retest of the breakout point. You know, we'll be watching both silver, which we are already long of. We're long of the silver miners. We're long of gold miners. We'll be looking for continued consolidation. I think we may be very close to a bottom here. but you don't know yet. I want to see a solid close above some support levels, and then we're going to begin to send out alerts adding more to these positions, especially if the dollar begins to weaken up in the back half. Remember, we have inflation data coming out, CPI, that's the Consumer Price Index, the PPI as well. That comes out on Friday. I forget when the CPI comes out, maybe Wednesday. Could be today for all I know. But watch out for those numbers. If they come out hot, expect weakness in the dollar. Bonds dropping like a rock this morning. That means the yields are surging. Holy cow. Very, very oversold here on a 4-hour chart. And I got to be honest with you, last night we went over the TLT, which is a 20-year bond ETF, and it looked as though it was consolidating. Wrong chart list. Bear with me a moment, because this matters. Hey, Pat, good morning to you. This matters. Here, go to this list here, because, man, I'm telling you right now, I've been warning about this for a long, long time. The 10-year yield is surging. This is a weekly chart, obviously only one day in this chart. This is an end-of-day chart, not reflective of the spike higher this morning. It's as of the close of business yesterday. And we do have a new weekly high. This little dot here reflects a new weekly high. And last week on Thursday night, Stock Charts Live, which we will be going live this Thursday. Use the link below to get notified. Join us each Thursday night. And I mentioned, I extrapolated down using this line in red here, connecting the peaks of prior yield rallies and stock market performance, and it coincided with the, let's call it, we'll round up, 2% on the 10-year yield. You may see some problems for this market once we hit that level, because I'll be honest with you, last night when I did Market Wrap with members, we spoke about bonds, and it looked as though we were going to get a rally. And we may get one by the end of business today. I'm not going to rule it out. But the price action, this is a weekly chart. Let's go to a daily chart. The price action looked favorable, meaning, yes, we closed down. This is what, the fifth consecutive day of down price action. We're due for a rally here. We are, yes, making new daily lows. You're seeing some buyers step in. And I'm not going to be the least bit surprised to see a rally here. I'm not saying that TLT is going to new all-time highs. Just the opposite. I think that the TLT is probably going to roll over and put lower lows unless the Federal Reserve puts their foot on the gas and inflates this bubble even higher. This is bad. I mean, think about it. The Federal Reserve is buying back $120 billion worth of debt every single month. I think $80 billion of that is treasuries. The rest is mortgage-backed securities. Yet yields are pumping higher. Just think of how much they're going to have to buy if they want to get yields lower. I mean, it's crazy. This is nuts. So if you want to know the threat to the market, look no further than the 10-year yield. And watch out for that CPI data and the PPI data, Producer Price Index data. Because if they come in very hot, look out below. Let's go to equities. Equities are shrugging off the spike in yields. This is the Russell 2000. And it is up a half percentage point. What it did do, though, and whenever you get this, it's not necessarily a good thing. This line in red here, it's been resistance and support a number of times in the past. And it's very porous. Meaning, we broke out here, retested here, failed here, consolidated, recaptured. Actually recaptured here. Now, technically, we're trading back down below it. So we're failing to hold these levels. I think we're beginning to see, despite the fact we're up a half percentage point this morning, we're beginning to see signs of a loss of momentum. And look no further again than the 10-year yield. It's all about bonds, folks. Ignore the bond market at your own peril. That's the cost of money. Now, the NASDAQ 100, to me, it's up 0.75 of a percentage point, and it looks like a basket case. Roop, it's a great day. You're darn right. As my father would always say, any day above ground is a good day. So, I agree with you. Pat Glog, you got it, pal. I know you texted about that yesterday. Are you into it, or are you just watching it? All right, so what we're looking for here on the NASDAQ 100, these are your FANG names. These are your triple Q names. And the headline risk rose exponentially over the past several days. I don't know what it's going to be. DOJ investigation, EU investigation, mixture of both. I don't know. They have too much power. And if they think simply because you have one party rule that they're just going to let them have this power, they're sorely mistaken. Those who forget history are condemned to relive it. There is no way that they're going to be allowed to have this power. No way. You silenced a sitting president of the United States. Good luck, pal. You silenced your opposition despite saying, meaning Parler, despite saying in front of Congress any number of times, they can go up and up their own micro processing site, micro blogging site, which they did, and they were wiped out. What they were doing on Amazon servers, I have no idea. That was a foolish mistake on the part of Parler. They should have anticipated this. All you needed to do is take a look at Gab and what happened to them a couple of years ago. So this thing with Parler is not a new thing. It's now history repeating itself. But Gab adapted, and so will Parler. Competition is coming. Okay, that's my diatribe. I'm going to stop being so long-winded. I don't like this chart. I don't care that it's up 1/3 of a percentage point. I don't like it. I think we're threatening to put in a lower high here. Watch for a fade. And if I'm wrong and those yields continue up higher and we do not get a rally in the bond market, technology is going to be the first to show or scream uncle because their margins get compressed with rising yields. Their cost of borrowing goes up. And with technology, in particular semiconductor companies, it's all about your margins, all about your margins. Where are my S&P 500s? All right, E-minis. Not loving it. We're up just shy of 1/4 percentage point. I think there's a good chance we're putting in a lower high here. Would I go shorting with reckless abandon based upon my observations? Nope. The bull market is still intact. We want a validation that the market has put in a lower high. And I do want to know if we begin to take out prior lows. Because once you start putting in lower highs and lower lows, well then, flip your screen upside down if you don't like the short stocks, because it feels unnatural. But if you get lower highs and lower lows, that means it's time to go shorting the market, because the path of least resistance has now changed to the downside. Let's update this. We're just getting ready. Okay. Looking for a lower high, looking for a break to new lower lows. We get those, that's our green light, especially if yields are on the rise, because we know who the villain is. We know the why behind the sell-off. And the fact that you have gold rising in the face of rising yields, good sign. A number of people are distraught by that. All you need to do, folks, is look at the chart of gold and yields back in the 1970s. They traded in tandem for a good amount of time, because while Paul Volcker was raising rates, gold was still moving up higher. Why? The Federal Reserve was so behind the curve in raising rates, they waited too long. And you had Nixon that took us off the gold standard, and inflation was rampant. The markets perceived that gold was still cheap relative to the dollar and relative to yields. And so the two were able to trade in tandem. That was the last time that they really traded in earnest for any length of time. Want to see inflation? You're looking at it. Oil breaking out this morning, 1.5%. Nat gas, I read overnight, was ripping higher in Asia and in Europe. So let's get up nat gas here. Let's see what it's doing here. Ripping higher, up over 3.25%. Wow. Wow. Let's take a look at a weekly chart. Wow, what a monster breakout. Take a look at this. Let's change this red because this now becomes support. This is technically support, but until we get a continuation move higher, which we're beginning to see now, it's going to remain resistance at current, but this is looking really, really good. Breakout, continuation move higher. This is a monster breakout in a weekly time frame for nat gas prices. Let's take a look at food prices really quick. Corn up over 30%. The bull run, it appears to be resuming. Soybeans, new weekly highs, up nearly a 0.5 percentage point on the week so far. Wheat, wow. We had a pullback last week. This week, reversal bar, we are up 1.69% on the week. But when you listen to the Federal Reserve, there's no inflation. We need inflation. Platinum. Look at this. We pulled back, retested what was resistance back here, became support this week. We are now up 2.75%. Gasoline ripping higher, 1.5%. These are weekly charts. Protein, live cattle, took a pause. They were rallying. I can go on and on here. Lumber did pull back. Okay, so we found one. All right, let's go to some chart requests. I'm going to go to members area. We're going to begin with GLOG for Pat. And let's bring up our friends over at TrendSpider. This is a very nice chart. Let's not begin with the daily chart, though. It's been a while since I went over this. So, GLOG, you're in on this, Pat, huh? Okay. JA, they're all moving up. 30-year, 10-year, 2-year. Remember, I go over it all the time. The yield curve, usually on Thursday nights. I'll go over it again this week. But the only one that's not up this morning, I'm looking at bond quotes, the yield. The only one that's not up is UNCH, is a 3-month Treasury. Everyone else is up. 1 year, 10-year, 30-year, 5-year, 6-month, 7-year. They're all up. Whole spectrum. All right, so GLOG, monthly time frame. Monster base here. We're going to have resistance of 5.61. Here, let's go back for a moment. I'm going to bring up the automated trend lines. I'm going to take off mine. All right, nothing on a monthly time frame. The weekly is different, though. All right, so a weekly time frame. Love this. Downward sloping consolidation. Automated trend lines. And there you go. So far on the week, Pat, you have a nice breakout. You could see that the automated trend lines picked up great support here at, let's call it $3.55 per share. We've broken out on the week so far. Obviously, we haven't closed there. We have a long way to go until Friday market close, but it looks very healthy. Daily chart. A beautiful outside reversal bar yesterday. I think it's going up higher. Let's overlay some daily trend lines. Not much happening there with the daily trend lines. Let's overlay on top of the daily chart weekly trend lines in dash line. And this is how you save time. Looking at the daily chart, but overlaying the weekly chart with their trend lines on top of a daily chart. And beautiful breakout. Would love to see a retest I'm going to keep a little bit of sensitivity on here. A retest of support today. Okay. Keep this active. I want to know if we touch or bounce. Good to go. I think it's very, very bullish. Which is where? Can you clarify that question, Pat? For Cena, we're going to have Square. For Jim, Costco, and Trillion. All right, so those are coming up next. Oh. 481 looks interesting. But I would get nervous if we close back down below the support level, Pat. But 481 is the number I'd be looking at. In fact, here, let's do this. 479 looks good too. Why? Because it was the peak of the high back here the week of June the 7th. So you could set an alert there as well. So I'm going to keep sensitivity. Here's a little trick. If you're trying to get sensitivity off and it doesn't work when you slide it this way sometimes, go all the way to the right, max it out, then come back in. And then it works for you. So I have two alerts set here. Good support levels to buy at. Good support levels at which to set stops below. And let's move on. So yeah, Pat, 455 was the low yesterday. Agreed. I don't think we're going there. It's beautiful support. So those are the two price points I would be looking to add or enter at. Okay. If we have time, JA, I need to go to members first, so I'm sure you can appreciate that, and time is limited. I have a couple of charts to get to, and I have to log off here soon. SQ. Let's get log off. Square. Not loving it. Topping action. Some profit taking up here. It's consolidating sideways. an inside week this week. No follow through on this big week last week. And we gapped down yesterday. So what I'd be concerned with here is, frankly, a double top. And if we break 208.70, becomes a short. We'll keep this active for a couple of weeks. Remember, these payment processors as well, and this is more political than anything else, these payment processors, PayPal included, have been part of this cabal of squashing competition or dissenters of opinion. So they're not going to be immune. I think this whole tech sector is going to come under a lot of pressure, a lot of scrutiny. So beware here of Square. I don't like the gap down. You had a failed breakout on Friday, gap down. This is the market sending you a signal. If we break down below the lows, 208.70 of the 29th of December, look out below. Costco. We spoke about Costco on Sunday night, and I wasn't loving it. I love the company. I wasn't loving the stock. And yesterday, a very, very poor price action. It attempted a breakout this month. It was rejected. We haven't broken support yet. You can see with the automated trend lines, we were in an uptrend channel. Now we have given up those support levels, and we're putting in, we're putting in lower highs. Now my alert here is set already because I was worried about putting in lower lows on Sunday night. We were here. Now we have put in a new weekly low. And I think we can move lower on Costco, daily chart. Horrible price action yesterday. I had an alert that fired off, but since we use an end-of-day trading model, meaning I try not to ever buy intraday, with the exception of the final minutes of trade, to ensure that if we're rallying on the day, we're closing at the highs of the day or near it. And yesterday, if you would have chased this stock higher on the new daily high, by the end of the day, you were licking your wounds. Price action like this is very, very poor. I think we're going lower here. Don't let the futures fool you. They're up right now. That doesn't mean they're going to stay up. Trill. Let's go to a weekly chart. We're pretty familiar with this stock. Let's take the automated trend lines off. All right. So I drew these lines here in red. Try to ignore the other lines. I was afraid of this being a dead cat bounce. I would still be afraid of it being a dead cat bounce, meaning hard sell-off, short covering rally, watch for a lower high, and if we break down to new lower lows below 11.05, look out below for Trillion. You have a lot of support in here. But I see no compelling reason right here, right now, to go buying these shares. Where are my Stokes? Weekly Stokes, yeah, man, you got to avoid this. Weekly Stokes setting up for a possible rollover. RSI already is. Look at this threat. Big sell-off, counter-trend rally, no new weekly high. Looks like we're stalling out, potential lower high here. I would say avoid, in my own humble opinion. And we broke trend yesterday. Good morning, Kat. Jay, I have enough time to go over one of those for you. I'll pick out BAC. I think that the banks are looking good, especially with yields rising. That assumes that yields continue up higher and the market is able to absorb those rising yields. We're going to break out here. If the market holds up, the S&P 500 holds up, banks are going to lead the way. This is a very huge breakout here. I think we're going higher. Note how we got through all of these volume shelves. Now they're dropping off. That means you have resistance dropping off, and the ease at which it's going to break out is becoming more and more easier because you don't have as much overhead supply. Daily chart. Very nice day yesterday. We pulled back. Some froth came off. Outside reversal bar. It looks as though we're going higher here. Bullish. With that, folks, I'm going to say everybody have a profitable trading day, and I will talk to you tomorrow. Be well.